Recession fears have investors hoarding the most cash since 9/11, Bank of America reveals. I'm going to tell you right now here, folks, I think we're about to see the last leg of this stock market crash. I'm going to be going over a lot of data, talking about stocks that I'm going to be paying attention to in the next week that are going to be very pivotal for the market in general. But first and foremost, thank every single one of you that wished me a happy birthday in that comment section. Yes, I am 30 years old, and there was a state of emergency in my area for weather on the day of my birthday. We got stuck in it actually driving through this hurricane like weather, driving around today, seeing roofs ripped off homes, cars flipped upside down, stuff I would have never imagined, but damn it, I'm still going to come and make these videos for you guys. So let's just go over some data that I find really intriguing. Now, obviously, I'm speculating that the crash is about to come to an end. The bear market is about to finish up in the coming months, and probably sooner than the coming months. I think coming to June here, when we hit the midst of summer, I think things will have leveled off, or we're going to start seeing a resurgence. Here's why. The fear and greed index, folks, is at its max. The max we've seen in a very long period of time, at least since the March 2020 crash. And if we just take a look at some data that just recently came out, I've noticed a lot of YouTubers showing this data. We're talking about the S&P forward PE ratios. We're now back to a mean here of about 16.4. The average median historically has been around 15. The S&P 400 mid caps is now the lowest it's been since the March 2020 crash, and dare I say all the way going back to almost the 2008 financial crisis. And small caps are in the greatest value bucket right now, guys, just absolutely clobbered. Everything from a valuation standpoint has definitely come back to a reasonable level where I think if you're investing today, in the next 3 to 5 years, you're not really going to regret anything you're buying here because the valuations actually make sense for once, right? Now let's talk about the global markets. Shanghai index has been in one of the worst bear markets globally, but even on this month, guys, it is up 7.46%. It looks like it's going to finish the month this way. The Sao Paulo, the Brazil stock exchange here, guys, looks like it's going to be flat or green for the month. The European index, which I would arguably say that the Europe might be going into a fairly big recession here, but their index isn't really down that much this month. The TSX getting hit fairly hard, almost down 4%, but the S&P 500 amongst all these global exchanges is getting hit the hardest right now. And I always feel like a lot of this is kind of confirmation bias, self-fulfilled prophecies, where everybody gets so fearful that you just kind of keep capitulating the same story, where every time we get these bear market rallies, hedge funds and big fund managers are using it as an excuse to stack cash and just gauge the market out. But inevitably, when these things start to level off or show some consistent green over and over again, all this cash that people in our chat groups have been hoarding, people on these hedge funds and these fund managers in general, guys, they're going to get aggressive again. I'm promising you. And when they get comfortable and that fear index switches off, because trust me, the market experiences fear a lot worse than they experience greed in markets like this. I just think when that fear alleviates, trust me, there's so much cash on the sidelines that needs to find a place to go. And right now, values are starting to make sense. So let's talk about inflation. I've been stating this again and again. We've seen the worst of inflation. It is going to be behind us. Looking at commodities across the spectrum, some of the worst commodities that were affecting everything from the housing market, energy. We'll go through a few of these. Lumber is now crashing again. Copper has been pulling back. Brent crude, as I've mentioned, the oil markets, guys, so long as we don't see the same kind of insane, parabolic shoots that we've seen like we have through that geopolitical event, this is really going to bode for the slowing of inflation. Wheat is one that I've been very cognizant of because this affects the global food crisis that we're experiencing right now, that obviously in the Western world we're not feeling it as bad as some other places that were heavily reliant on the Ukraine, let alone talking about fertilizer costs, all of that stuff. So at least wheat is not doing these real parabolic moon shoots, but hopefully it finds a median here along with the rest of these commodities. But I'm going to make that statement right now, guys. The worst of inflation is probably going to be behind us. We're still going to have high inflation this year, but not like we've seen it so far. Now let's talk about some stocks. I think some of these stocks, guys, will really be pivotal moments for deciding where the stock market kind of perpetuates moving forward, because this is the last earnings season kind of baking into the market, hopefully maybe finding a bottom here. But Nvidia, I mean, this stock is down a whopping 50%. You know how insane that is for Nvidia, a company that has been growing consistently quarter over quarter for like the last several years, and they're going to be posting earnings coming up May 25th. So I'm going to be very fixated on this one. I think that's coming up on Wednesday. And if you got to remember, every time earnings get posted, even if they've been good earnings, the stocks still tank. So if we can start seeing some earnings that, even if the earnings aren't fabulous or crazy, and it starts showing a little bit of sign of hope and the stock rallies on it and consistently stays up, I think that's going to be the first sign that the markets may have potentially finally found their bottom. Now, on the Canadian perspective of things, the banks. So we've got the US banks stating people have more cash than ever. Things really aren't bad from the consumer pricing, idea of things with jobs. Job reports are pretty good here, guys. So we're going to see the Royal Bank post earnings along with many of the Canadian banks over the next coming week here with May 26th. So this one's coming up, I believe, on Thursday, which I'm going to be highly fixated on, one of the largest positions I have. On the Chinese side of the board, of course, we should talk about Alibaba. I still love Alibaba here as much as Charlie Munger. Love the Chinese market. I think there's huge potential here, maybe greater than even in the US economy. And BABA consistently month over month has just been getting slaughtered. But it looks as of recent, we've been finding this new range area, which I recently said, I think BABA's found its bottom. I don't think we're going to revisit the lows that we saw. I mean, you take a look at that low that we hit here when we hit the 70s, the low 70s. I think that's it for this. I think we're going to get stuck in this mean, and we'll see what earnings can do for it. And again, I would pay real close attention to how these stocks react to these earnings. So Alibaba's coming up on the 26th as well here. Now, I don't want to get overzealous just yet because we did start seeing some pretty healthy green today across the general markets, which was nice. I mean, it's kind of nuts because I think when I posted my video last week, I was down almost 40,000 to like a $352,000 portfolio. And now today I'm back over 360, and I rarely pay attention to this as much as maybe most people do, but it is fun to scroll in and just see what the numbers look like. And honestly, it does look as though perhaps, no guarantees here, that again, we could potentially be finding some bottoms if things stay consistent the way we are in this kind of volatility range, right? It's just a matter of if people have finally stopped being so fearful with the valuations that currently sit. Now, like I said, guys, it's been a pretty good day. Hopefully you're holding a lot of stocks that are doing okay. I'm going to make more videos talking about things like Tesla, Shopify upcoming here pretty soon because they're still getting hammered. But again, not to any extent that the general markets in those sectors are. I mean, everyone's like, oh, Tesla's finally having its day and it's going to crash. But then again, Ford's down just as much. GM's down just as much. Honestly, the only automaker doing very well, I think, is Toyota right now. And I don't buy any of the other auto. I don't even own Tesla right now. So, I mean, I just like looking at it. I don't hyper focus on it. Now, I've noticed Jeremy from Financial Education has also been talking about that he thinks that small caps are going to have the most wicked rally and they'll start rallying back first. I'm still a little bit hesitant on small caps because it's hard to put a valuation on them when they're not posting bottom, EBITDA. There's no way to value that when they're all growth perspective into the future. That's the problem with Shopify right now, right? Shopify is tanking miserably. Now, the reason I think Shopify is getting hit, the same reason small caps are. So if you think small caps are a good value, I think there's a lot of large cap opportunity right now, especially with things like Shopify, guys, because people are like, there's no value to this. They're spending all of their money, but yeah, they're spending it into future potential, just like Amazon. They want to do next day delivery for their clients. So they invested all of that capital, guys, into warehousing and fulfillment centers, and that's going to come into fruition over the next year or two. And as I've said before, I don't think the S&P 500 deserves to be trading at its average historical mean of a 15 PE because we're seeing growth rates unlike we've seen historically in the past, and the fact that these large cap companies are bigger than they've ever been, making more profit than ever before. So I'm honestly going to say right now, guys, that as soon as I get through my corporate taxes, every dollar I have, literally every expenditure capable to me, is going to be going in the markets, whether it's index funds or individual stocks. I haven't really decided, but if you have cash right now and you're still a little skittish, I would just start investing consistently week over week or every day and maybe span it out over the next 2 months. But I would be a little bit more aggressive here if you have the capability to do so. But I pass the question off to you. I'd love to know what you guys think about all of this in that comment section below. Consider subscribing because, of course, I'm going to be back tomorrow and the next day and for as long as I continue to be investing. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.